Okay, welcome students. I wanted to do another problem dealing with chapter 10. Haven't done one for that yet. Let's look at my screen here. All right, how about a meme? There's an introvert joke for you fellow introverts. If you call, will I pick up the phone? No, no, but in red. All right. Introverts are coping with the quarantine a little bit better. My sympathies to you extroverts. It's rough. All right. This problem is going to deal with Ingrid, right? Ingrid runs a business. She purchased new 5-year class property, right? So we're already told the recovery period. Its cost was $230,000. Let's go ahead and keep track of this stuff. And that was on March 10th. Recording. On December 15th, she purchased 7-year class property for $550,000. She has net business income of $400,000 before consideration of any Section 179 deduction. All right, so part A asks us to calculate Ingrid's cost recovery for, right, cost recovery, right, depreciation, anything else, right, she can do to deduct the cost of the asset for 2019. This time we're going to assume she does not make the Section 179 election and that she elects out of bonus depreciation. All right, so basically this one is going to let us practice just using the regular maker's depreciation. So the first thing we have to do here is we have to look at, let's see, the total property placed in service during the year, all right, with both of those assets is now $780,000. Okay. So why I want to come up with that total is because now I want to look at how much of that was placed in service during the fourth quarter. All right, so since the second asset was purchased, if it doesn't tell us about it being placed in service in these problems, we can just assume that when they purchased it is when they placed it in service. This one was December 15th, right? So that's definitely the fourth quarter, October, November, December. So that 550,000 out of 780,000 total was in the fourth quarter, right? I can immediately, right, see that's already more than half, but, right, just to be extra clear, that's 70.5% about, right? I'm going to put 0.705, right? Or 70.5%. Well, that 0.705 is greater than 40%, right? So, right, what does that mean? That means we have to use the mid-quarter convention out for these assets, right? Because more than 40% was placed in service in the fourth quarter, we have to use the mid-quarter convention, right? So that's the hard part of this problem, right? That's the trickiest thing that could happen when I'm just using the regular maker's depreciation, is deciding whether or not I have to use the mid-quarter convention, right? My default is half year. That fourth quarter property was enough to trigger the mid-quarter convention. All right, so let me look here. The 5-year class property was in the first quarter. So I'm going to go first quarter, 5-year, 35% is what I'm going to use for that property. Its basis was $230,000. Okay, so I'm going to take 230,000 times 35%, or 80,500. And for the second asset, right, it was 7-year property and it was fourth quarter. So if I go to fourth quarter, 7-year, 3.57%, or also known as 0.0357. That's going to give me $19,635. Okay. All right, so my total deductions, right, cost recovery deductions are $100,135. All right, that's my answer for part A. Oops. There we go. All right, so note here, right, the other thing to remember about mid-quarter, right, so this, let's say this asset here, right, this first asset, right, that was put in place in the first quarter, right, and it's 5-year property, so I started here. Let's suppose that she sold it, right, it's not in the problem. She sold it in year 2. Since she sold it before the end, we have to apply the convention ourselves, right? So if she sold it in year 2, right, the rate is 26%. Right, this is just, right, me spitballing here. All right, so we're going to take the 26% times, right, we're always using the initial basis, our initial maker's basis, right, but now we need to know, when did she sell it in year 2? Let's say she sold it in November of year 2, right? All right, so I don't want to go here to the fourth quarter side because she sold it in the fourth quarter. I want to go here to get my 26%, but then I'm going to go, okay, so it was the fourth quarter, so she gets half of the fourth quarter and all the quarters before that, right? So she gets the third, second, and first quarter, half of the fourth. So it's going to be times 3.5 out of 4, right? So it would be $52,325. Right. Once again, that's not in the written problem. I'm trying to use this problem to cover all the tricky things that come up in chapter 10, right? So those are the hardest things with regular makers, is just knowing if you have to use mid-quarter and applying the convention yourself if you sell an asset early. Right? Lots of other good examples of that in the slides. All right, so let's move on to part B. Part B is using the same facts from the top, but it says, this time assume she does make the section 179 election, right, to deduct more in the first year, but not bonus depreciation, right? Maybe that's not realistic. The reason we do this pyramid, things like this is, right, bonus depreciation probably won't last forever. So we want to learn how to use 179. And certain assets sometimes might not be eligible for bonus depreciation. It's good to know how the 179 rules work. This problem tells us to apply the 179 expense election in a way that maximizes the current year cost recovery. All right, so we know that the maximum, I learned how to, the shortcut to make my section symbol. Maximum section 179 expense for 2019 is $1,020,000. How about a short meme break here? Let's check it out. Okay. Celebrities. Guys, we are all in this together. If I can stay home, so can you. Their homes. Pretty nice, right? Sympathies to you guys out there in cramped quarters. Okay. All right, so we're part B, we are applying 179 expense. Right? But we know, right, there's a phase out, right? If you put in service a certain amount of property for the year, the phase out threshold is $2,550,000 of eligible property for 2019. All right, so Ingrid's total is only 780,000. So she is not phased out. All right, so she could elect up to the maximum of 1,020,000. But, right, because of her net business income of 400,000, she's going to be limited by that way, right? It's a limit, it's not a phase out. But she can only deduct 400,000 due to her net business income. So the way we want to, the problem asks us to maximize the current year depreciation or cost recovery deduction. So the way that we'll do that is to elect 400,000, right? We're just going to elect up to the amount that she'll actually get to deduct because of her income. And we want to apply to the longest lived asset, right? You probably, right, hopefully you picked this up from the homework, right? By choosing to apply it to a longer lived asset first, right, you're accelerating those deductions more, right? And that gives you, right, because a shorter lived asset is going to have a bigger regular deduction, right? So by accelerating from the longer lived assets, you maximize your current deduction, right? And so due to the time value of money, that's usually the best. And right, so it'll definitely give you the biggest deduction for the current year, right? So her longest lived asset, right, she's got 7-year and 5-year property. So the 7-year is the best to use the 179 on. All right, so if we take the $550,000 of 7-year property, right, that is the initial basis. She's electing 400,000 of $179 expense, immediate expensing. All right, so you probably saw in the slides, I kind of like to do this arrow and over to the right, keep track of how much, right, the things that I'm actually getting to deduct. All right, so that means she has $150,000 of remaining basis for makers. All right, so this is an interesting thing. What happens now is that 179 expense changes how we do the calculation to know if we use mid-quarter. That 179 expense, that's removed from the basis, so we don't count that towards the property put in service during the year. All right, so that's another reason, right? It was also good to maximize the current year. It was also good to use 179 expense on the asset put in service in the fourth quarter. So now our calculation is 150,000 plus 230,000 from the other asset equals, right? It's counted as if we had only 380,000 of eligible property placed in service. Right, and so then now my fourth quarter property is just that remaining 150,000, right, which is should be just under 40%. All right, so I'm at 39.47%. All right, so since that is not more than 40%, we are going to use the default half-year convention. We're no longer considered to have enough fourth quarter property that we have to use mid-quarter. So now, all right, I'm going to take my remaining basis from the 7-year asset and my initial basis from the 5-year asset, and I'm going to find the rates. But now, right, the trick is always using the right table. Now I'm going to use the half-year convention. Since that 179 expense reduced my fourth quarter basis, right, for my calculation there, I'm back to the default. All right, so for the 7-year property, I'm going to use 14.29. This table is not labeled great, right? These are percentages or rates. So let's see, I want to use 0.1429. And for the 5-year property, I want to use 20%. So I'm going to be so now my maker's depreciation is 21,435 there. Used. And for the other asset, 46,000. Okay. All right, so I can line these up. All right, if that helps you. You guys are mostly accountants, right? So you suckers for that sort of stuff like me. All right, so these are all the amounts, right, I'm getting to actually deduct, right? So my total is going to be that, right, the makers plus that 179 expense that I got to claim for a total of $467,435. All right, so that would be my answer for part B, right? That's the most I could deduct, right, under these parameters of not doing bonus depreciation. It's the most I could deduct for 2019. So that's the answer that we're looking for, right, to this question. For education purposes, we can think about something else that Ingrid could have done, even though it won't maximize the current year. She could have elected up to 1,020,000, right? She doesn't have that much property, right? But that's the maximum, right? So even though she's going to be limited on what she can actually deduct, by her net business income before the 179 expense, right? So the most she can actually deduct for 2019 for 179 is 400,000. But she can actually elect more than that, right, up to the maximum, subject to the phase out. Right, so what she could do is on the $550,000, right, 5-year property, she could elect, right, to expense all of that under section 179 expense. Right, but what she actually gets to deduct is still only 400,000. Because of her income. Right, but since she elected more than that, she now has $0 remaining basis. All right, so there'll be no maker's depreciation. On the second asset, right, she still hasn't used up to the maximum yearly for 2019, 1,020,000. So she could also elect 230,000 of 179 expense on that asset. But because of her income limitation and because she's already deducted, right, up the 400,000 on the other asset, actual deduction, right, she doesn't actually deduct anything, right? But nevertheless, she has $0 of remaining basis, right, because of the amount that was elected. All right, so can I come up with an extra space here somewhere? Okay. So the question is, right, well, now, why did she elect that when she didn't actually get to deduct it? And now her total deduction, right, her total deduction for 2019 is going to be 400,000 when we already saw she could have got 467. So why would she do this? Well, now she has a carryover, right? Because unlike the phase out due to total property put in service, the income limitation allows you to have a carryover. She has a carryover of, right, she has the 150,000, right, that she couldn't deduct here, right? She elected 550 but only got 400, plus the 230 that she elected but didn't get to deduct here. Right, so she has a carryover of 380,000. Right, so even though that made her deduction smaller in year one, if she has enough income next year in 2020, she can deduct this 380,000 in 2020. So this option might maximize her deduction for the 2 years, right? Which could be, right, over the long term could be better, right? So that's why they might do something like that. Even though the best answer, according to how we phrase the question, would be our first option, right? But, right, remember, it's tricky where you're reducing the basis by more than you actually deduct, right? That's a tricky thing that could happen under section 179, right? So we're trying to cover a lot of the tricky things that happen in chapter 10. All right, lastly, let's think about part C. Part C is, right, more realistic. It says calculate Ingrid's cost recovery for 2019. This time assume there's no arbitrary limits on what types of cost recovery she uses. She just wants to maximize her current year cost recovery. All right, so for the last few years, we've had a couple years, and the next couple years, we've had very generous bonus depreciation. Right, so without these arbitrary limits saying she's not going to use bonus depreciation, right? Ingrid can recover the entire cost of the assets using bonus depreciation, right? So if we take $550,000, that was the 7-year property, right? You guys ever see that movie 7 Years in Tibet with Brad Pitt? It's pretty boring. Brad Pitt was huge back then, and Tibet was also very popular back then. This was a popular movie. Anyways, spent 7 years in Tibet. His 7-year property could have been fully depreciated by the time he got back. I'm struggling a little here. Should I throw in a meme? This is me at a good spot in life, ready for more growth. Here comes coronavirus. Made me laugh for some reason. All right. Have to see, right? So we have the first asset, the initial basis is $550,000, right? Well, if she doesn't elect out of bonus depreciation, this property is eligible for bonus, right? The bonus depreciation rate for 2019 is 100%. All right, so what she gets to recover, $550,000. Now there is $0 remaining basis. On the other asset, right, its initial basis, right, of the 5-year property was $230,000. Well, 100% bonus depreciation means she gets to deduct $230,000. Alrighty. So she's got $0 remaining basis. Right. So with the current bonus depreciation rules, right, she gets to deduct 550 plus 230, 780,000. All right. And there's no basis left. We don't even have to figure out the maker's depreciation. So nice big deduction, nice and simple. Right. So if you don't have any of these limitations saying not to use bonus, and you just want to get the biggest deduction, right, you can just use bonus on the whole thing. If she didn't have, right, if her income was $780,000 or more, she could also have just used 179 expense to deduct the whole thing. Right, both simple ways if you can use them. Right, note here if right, she can use bonus, right, but if her business income is still only $400,000, right, it's going to give her a loss. And because of something we didn't really talk about called the excess business loss limitation, she won't actually be able to deduct all of that loss. In 2019, some of it will carry forward. Right, so that's another reason why she might, right, if her income is limited, she might just want to use 179 expense up to that amount. Right, another good reason to understand how 179 works. Right, because if you elect bonus, you have to do the full bonus. And also if she had, another thing she could do, all right, just trying to keep it simple here, right? If she could just use bonus on the 7-year property. And once she used it on 7-year property, she would have to use it on any other 7-year property that she put in service that year. right? But she wouldn't have to use it on the 5-year property. So she could have just done that, right? And then she could have you, right? Since her income was only 400,000, that might have made sense. All right, anyways, hopefully that helped with chapter 10. All right, it's the 179 is right, probably the trickiest part of chapter 10. Mid-quarter can be confusing, and applying the conventions when you sell an asset, right? Definitely let me know if there's other topics that you're struggling with, and we'll try to make videos on those if there's time. Oh shoot, I had another meme. I was going to use it if I had to round, even though it's sort of inappropriate. Just going to put it there. All right. Yeah, that's inappropriate. I don't know who put that there.